If you're old enough to remember how central banks, how conservative individuals, non-speculating individuals, those who wanted to protect their wealth for the long term, how they looked at gold, and this would include the Chinese. They reckoned that you should have somewhere between 10 and 15% of your money in gold. If you just take that 10% and you look at the cross-border flows, firstly, the big capital inflows in the 80s, and then the growing surpluses with continuing inflows, the amount of stuff crossing the PBOC's desk, you take 10% of that.
Alasdair Macleod is a prominent precious metals analyst and head of research at Goldmoney, a global leader in precious metal custody and the world's largest precious metals network. For decades, Alasdair has researched and documented shifting geopolitical dynamics and how it relates to the precious metals industry. He has done a lot of work on China and how the Chinese government with its allies aims to return the world to a gold standard. According to the renowned analyst, whose work is often referenced by other analysts in the industry, Chinese gold demand has been on the increase for decades, showing the country's intent on diverting away from the debt-based fiat system to a more sustainable system backed by tangible assets like gold and silver. Alasdair believes the plans for a gold-backed financial system were first laid in 1983, when the People's Bank of China was appointed under regulations from the Central Communist Party as an agent for acquiring and managing the Communist Party's gold and silver. Since then, Alasdair believes the PBOC has been discreetly loading up on gold, and now has over 27,000 tons of gold stored in preparation for the endgame. In one of his recent interviews, Alasdair said, "If you looked at the money flows going through the People's Bank of China's hands in terms of foreign exchange, and took, say, 10% of that, investing that 10% in bullion would have been the equivalent of about 20,000 tons of gold. That is my working assumption for what the People's Bank of China acquired and hid in various accounts. We're not talking about reserves. We're talking about hiding in various government accounts like the People's Liberation Army, the Youth Communist Party, and so on and so forth. It's all spread around but hidden." To support his claims, Alasdair pointed out that despite what the PBOC was appointed to do in 1983, Chinese people were not permitted by law to acquire gold and silver until 2002. Yet, after the 1983 declaration, China invested so much in gold mine output that it rapidly became the largest gold miner in the world. The Chinese government also had a monopoly on refining gold in the country and continued to import substantial amounts of gold to feed its mining operation, despite not allowing its citizens to acquire gold for decades. For Alasdair, the only conclusion is that China was storing every single ounce of gold it could get its hands on in preparation for a new world order. Every event that has occurred since then has prepared China and informed investors for this very moment, the inevitable collapse of the current financial system and the birth of a new system backed by gold and silver. As we present clips from Alasdair's interview, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell so you get instantly notified whenever we post a new video. Thanks for the support and enjoy the video.
The People's Bank of China has been buying gold, but actually it hasn't been buying gold, it's been selling dollars. It's been reducing its dollar commitment. Now, as to whether it's frightened about the future value of the dollar, or whether it is merely in line with the Communist Party's meme of reducing the involvement of the dollar, you can pick either of those reasons. When we look at the other central banks, predominantly in Asia, who have been accumulating gold, again, I think there are these twin reasons. They can see that the geopolitics is actually working against the dollar. So the dollar's value is likely to decline on that basis alone over time. Furthermore, they can see, they will know, they have the inside track. They have these sort of quiet meetings to which we are not privy. Amongst the monetary panjandrums, if you like, in the Asian central banks, knowing that they're moving towards a gold standard. It's probably some way off, but obviously you need to accumulate some gold. Now, India is very interesting in this because India has denied gold. India has been Keynesian in its approach to economic management. And I think that also includes, sort of a sort of semi-official view that gold is a pet rock. But that has now changed. The government is now accumulating gold. Why? Because they're a member of the Shanghai Cooperation Organization. They're privy to the conversations, and they know that that's the direction in which it's going. They don't want to be first going there, but they know that they would be complete idiots not to accumulate some gold, even if they hope the problem will go away. So that, I think, is what's happening at the central bank level. Now, at the market level, we have seen for well over a decade now that the Chinese in particular have been stripping gold out of Western vaults, out of Western mines, whatever. They have been accumulating gold. I have a copy of, in English, of the original articles appointing the People's Bank of China to act for the Chinese nation in the accumulation of gold and silver. And that was dated in 1983. Now, since then, there's been massive investment inflows and in through the 80s. And in the 90s, massive and growing, and through into the 2000s as well and beyond, growing export surpluses. Now, all the foreign exchange transactions are handled by the same organization, the People's Bank of China. So all those flows go across their desk. Now, if you're old enough to remember how central banks, how conservative individuals, non-speculating individuals, those who wanted to protect their wealth for the long term, how they looked at gold, and this would include the Chinese, they reckoned that you should have somewhere between 10 and 15% of your money in gold, and the rest is credit for you to, do whatever, buy houses, buy expensive yachts or whatever. That's the Arab approach. If you just take that 10% and you look at the cross-border flows, firstly, the big capital inflows in the 80s, the amount of stuff crossing the PBOC's desk, you take 10% of that at contemporary prices. And remember, this was a bear market that took the gold price down to $250 in 2002. Then I reckon that was over 20,000 tons. That's a substantial amount of gold, the largest, in fact, of anywhere in the world.
At the end of January 2024, China's report to the IMF showed that its official gold reserves stood at 2,191.53 tons, 243.22 tons of which were added in less than 2 years. This puts China behind 5 countries in terms of gold reserves: the United States, Germany, Italy, France, and Russia. However, if Alasdair is right, and China has over 27,000 tons of gold, that will exceed the gold reserves of these 5 countries combined. While many don't agree with Alasdair's figures, everyone agrees that the Chinese government has way more gold than it reports. The situation is different from the United States. The official report shows that the US owns over 8,000 tons of gold, but experts are certain the true figures are nowhere near that. So, while China is underreporting its gold reserves, taking delivery out of the Shanghai Gold Exchange Vault, and urging its citizens to acquire more gold, the reverse is the case in the US, where the debt-based fiat system is still reigning supreme.
If you look at the savings ratio in China is over 40%. But more importantly, the household savings. In other words, this is just households. These are individuals who are saving, if you like, their own earnings, their own profits, whatever, is estimated to be 35% of China's GDP. That is roughly $6 trillion. So you've got $6 trillion of savings going into property, stocks. It can't go into foreign currencies because there are exchange controls. That's not permitted, and it goes into bank accounts. Property is no longer fashionable. We needn't discuss that. The stock market for the last 3 years has gone down very substantially. It's recovered a little bit this year, but I would suggest that the sort of rather conservative saver in China is not really all that switched on by the stock market. So what do? Well, it's all been accumulating in the banks. And the banks offer what they call certificates of deposit, which is slightly different from our CDs. A certificate of deposit in China is basically a deposit of up to 3 years with a fixed rate and a better rate of interest than, let's say, instant withdrawal or 1 month money or whatever. But these banks also offer gold accounts. And this is something which was brought in by law, getting the banks to do this. And it's all part of the gold ownership story, which China is working towards as a means of its ultimate protection from our attacks on China or our attacks on ourselves as we destroy our own currencies. All you need to have is 500 yuan, maybe 600 yuan in some banks. That's the equivalent of about $70 to $80 in order to open a gold account. Now, I don't know whether the banks, match the gold account with physical gold. Suspect that they probably run a sort of fractional reserve system. I doubt if it's highly leveraged. I very much doubt that because they know the official policy. And I would think they're in the market picking up gold whenever they can. When it's offered, take it. I think that's what they've been doing. And just bear in mind that the alternatives for this $6 trillion equivalent. $6 trillion, incidentally, at the current price is 75,000 tons of gold. I mean, we're talking a considerable amount of moolah here. You can see how it is that the shortage of gold in Western markets has been getting greater and greater and greater. You only got to look at COMEX and see the withdrawals. Now, the withdrawals don't necessarily go out of the vaults, but they certainly go out of the possession of the liquid hands, if you like, in the COMEX market. And I mean, there's staggering amounts being withdrawn. And now it's also happening with silver. So where does gold go in this? Well, let's put the monetary thing aside and just think in terms of supply and demand. Well, there's no supply and there's demand, which on rising prices could indeed become self-feeding, because another aspect which various of my friends have noted is that in the futures market, the Chinese speculate wildly. I mean, they want leverage. They really do. But we're talking about Chinese traders, not the housewife. They know that, they're close to the financial system. They know the story I've just been telling you about the People's Bank, etc., about the official attitude to gold, the official attitude to the dollar, and so on and so forth.
With every passing day, the state of the US economy bears more and more resemblance to previous periods of immense financial strain, such as the 2008 Great Financial Crisis, the 80s high inflation, high interest rate environment, and perhaps even the late 1920s before the Great Depression. With a debt-to-GDP ratio of 130%, the United States is one of the world's most indebted nations. The economic situation is expected to get even more heated in the coming years as the US racks on more debt and debt expenses. Experts forecast that the US economy is heading in the same direction as Japan, which has a 260% debt-to-GDP ratio and is currently on the verge of a sovereign debt crunch. Alasdair firmly believes going back to a gold standard is the only thing that can save the global financial system from a massive implosion that will see many people lose everything, and only investors who prepare by investing in gold and silver can survive what's coming. Please share your thoughts on Alasdair Macleod's predictions for the US dollar, gold, and the global economy in the comments section below. Also, ensure you smash the like button, subscribe to the channel, and turn on the notifications bell for more videos. Thanks for watching, and see you in the next one.